Hey, what's going on, guys? Welcome back to my channel. This is Blood Phantom 81. In this video, I'm going to do an entire market overview video and analysis, and so it's going to be a treat for those of you that are fans of technical analysis. Account's currently at 359K. It was actually just at 360 like maybe 5 minutes ago, but the market knew I was about to make a video, so I was like, let's tank this thing. But anyway, so yeah, let's just jump right into it. All right, so starting off with the Nasdaq, so in my opinion, it's looking very strong, and I don't think that that sentiment is shared amongst other folks. I think there's a lot of talks about us being near some kind of top, but in my opinion, I feel like the Nasdaq is setting up for a pretty big move here. And I know I said that around this time as well. We had some, obviously we had a drop. The last time I said the market was expecting a rally, but it seems as though we're just in this consolidation and the market is hitting its head against this resistance area, and now it's printing a daily candle above this resistance area. So that doesn't mean that we're going to break out immediately. It just means that the probabilities are starting to favor a breakout sooner rather than later. Now, of course, we can hang around this resistance area, maybe even drop down a little bit. Let me go ahead and throw on the 50-day moving average. Like I wouldn't be surprised if we need like another retest of the 50-day before we actually start to rally. But it seems as though the market is setting up for a pretty decent rally. And the biggest analog here is 2017, because this is such a important year for me, because this is when we started to realize, hey, markets can really have strong rallies that last like over a year, especially after they come, after they have big consolidations. And so here we basically consolidated for almost like a year and a half, and then 2017 was a monster rally. Now, the reason why this is similar is because even almost a year after this rally started, literally a year after this rally started, we were sort of in this consolidation range. And so, yes, we were technically making higher highs and higher lows, but this is still in and of itself a consolidation. In fact, that's how bullish the market was here in 2017, is that even the consolidation was higher highs and higher lows. And so, obviously once we broke this, however, had a retest, and this right here, this rally was a lot smoother. This is like taking it another gear, where here it's sort of choppy. Yes, it's still an uptrend, but it's definitely choppy. So let's go ahead and take a look at today. So pretty similar picture in that, yes, it's choppy, right? Higher high, higher low relative to this high, relative to this low. Now we're making a higher high. And then we'll find out if there's going to be a higher low, as I mentioned at the beginning of this video. But essentially, that's how bullish I see this market, is that even the consolidation is making an uptrend. And so in terms of price targets, to be honest, I am anticipating something towards 15,500 for the Nasdaq. I don't know about 16,000. That'd be awesome, but that's sort of my price target at the moment. And so I'm basically just sitting tight in a lot of my positions. I'm not really selling too much here, although as we start to continue to rally, I'll probably take some off the top, and I'll tell you what I'm going to do with that money towards the end of this video. Let's quickly go over the S&P 500, which to me isn't as important as the Nasdaq. Obviously, based on what I buy, obviously I'm going to care more about the Nasdaq than the S&P, but the S&P basically recaptured the 50-day moving average. And if we take a look at an hourly time frame, it looks like we filled this down gap, so it's no longer going to act as resistance, which is great, which was probably one of the best things that could have happened, especially after this pretty gnarly gap down. But yeah, as I mentioned, we recaptured the 50-day, and it looks like it's setting up for a move back to all-time highs, in my opinion. And then just very quickly looking at the Dow Jones. So Dow Jones looks a little bit more bearish, but I would say from the start of 2021, it looked like the Dow Jones was a clear leader, especially up until May. So for 5 months, it was a clear leader, and now it looks like it's starting to pull back a little bit. But this doesn't really concern me too much. Now let's talk about some innovative stocks, because I feel like this in and of itself is a trade idea, because a lot of the innovative stocks move together. So if you take a look at something like ARKG, which, by the way, I'm starting to get really, really deep into genomic stocks and starting to get to know them pretty well. I do want to make a video about them because I think it's going to be amazing video, if I'm being completely honest. But yeah, so anyway, so the Genomics ETF recaptured the 200-day and the 50-day moving average. Looks like it's going to make a higher high relative to the high here on June 14th. Overall, pretty decent look, and this is sort of makes me think that a lot of consolidation periods usually don't end until they have like another sort of wave of fear, in the sense that, like, obviously, yes, this pullback was pretty sharp, pretty drastic, pretty aggressive. We sort of consolidated sideways for about a month and a half, and then this uptrend couldn't really resume until we saw another wave lower. And so now, I mean, I'm not saying that this is the bottom necessarily. I'm just saying that this is pretty constructive of a move, and it sort of looks like a bottom is forming. There's a quick lesson I want to give here, which I usually talk about these lessons quite a bit, but I just think there's a perfect example here, which is stocks in similar sectors, industries, and classes move together. And so I said sectors, industries, and classes because that's all relevant. It's not just sectors, it's not just industries, it's not just classes. Sometimes it's even up to markets. So what do I mean by that? So let's take a look at the Genomic Revolution ETF. So there's four main genomic stocks, or four types of genomic stocks that are personally my favorite. We'll talk about a couple of those. So Twist Biosciences, for example, looks exactly like ARCG, right? And if we take a look at Pacific Biosciences, it looks exactly like Twist, except that Pacific Biosciences is a little bit stronger than Twist, right? Because this high is higher than any of the highs that were printed here during May. But the idea here is that there are going to be a few discrepancies, in which I'll share another example after this one. But for the most part, they all move together. And so this happens across industries as well. So for example, if you take a look at RK looks extremely similar to ARCG, even though RK comprises of a lot of different stocks besides genomic stocks. Heck, let's take a look at a company that's not even that big of a constituent, which is the Trade Desk, and it looks almost identical, right? And so we need to start categorizing these as either hyper growth or innovative, whatever you want to call them, new wave tech. These are all sort of their own class. And so the reason why this is incredible as an opportunity for us investors is because when these types of stocks as a whole start to suffer, it gives us the confidence to say, hey, it's just that money is leaving this area. It's not that anything is wrong with any one of these individual companies, right? And so to ask a question like, hey, what's going on with the Trade Desk, and doing like a deep fundamental analysis on the Trade Desk, when it's not actually necessary, right? Because you take a look at the trends of the market, and it quickly becomes clear why the Trade Desk is going down and why it looks exactly like that. So I mentioned I would also take a look at some discrepancies. So you guys know I'm a fan of content delivery networks. I've made a couple videos about them before. The two main content delivery network stocks are Fastly and Cloudflare. And this is an example, however, of even though they're in the same markets, Cloudflare is a much superior stock to Fastly. And that's also something I mentioned. As you guys can see, Cloudflare is completely taken off. Retested the 200-day moving average and destroyed this high. I'm hoping for a higher low. That'd be awesome, so I can add more. But for the most part, it's making Fastly look not that great. In fact, Fastly looks just like a typical innovative stock, maybe even a little bit worse, because we have this like sideways consolidation sort of broke below that, and now we just filled this gap, and so that's why it's acting as resistance. But for the most part, look, I like Fastly and Cloudflare. I think they're fantastic companies, but they don't necessarily compare. Even though Cloudflare is more richly valued, I still think it's a superior company. And this is an example of some of the discrepancies that you'll see even amongst companies that are doing the same exact thing. So anyway, just wrapping it up with this tech talk. So I'm very, very pleased with how the market is playing out. And yeah, I think 400K is right around the corner. I know I said that last time, but it's just so much fun watching all these stocks go up, especially some of these innovative stocks. So now that we're done talking about that, let's talk about what's probably on everybody's mind lately, which is BTC and the rest of the crypto market. So wow, just incredible volatility. Now, why is Bitcoin dropping? So a lot of folks can point to China banning Bitcoin in China or other sort of fundamental reasons. In my opinion, this is the first time that we've actually gotten below the 200-day moving average for this long during a bull market and saw a death cross. Now, death crosses aren't inherently bad. And by the way, for those that are uninformed, death cross is when you have a 50-day going below a 200-day. There's nothing like inherently like, okay, once this happens, like it's, you just turn on the bullish signal, or sorry, bearish signal. I don't necessarily think it's that black and white. However, in this particular situation, it is pretty clear, in my opinion, that the confluence of both of these starting to slope down. Obviously, the 50-day is sloping down. The 200-day is not sloping down yet, but if this trend sort of continues, the 200-day is going to start to slope down. And so the confluence of both of these obviously acted as resistance here, and obviously we got rejected from the 200-day here. But here is definitely a more significant rejection because now we got rejected by both of them. And so now it's clear this is going to be a tough hurdle to get over. And I'm not saying that we can't just have a rocket ship higher. It's just we have to play the probabilities, right? Probabilities say that this is a tough area of resistance, in my opinion. And so the support area that we're sitting on right now, which is about 31K, is definitely hanging on by a thread. And look, even though we did technically make a higher high here, this is more like equal highs and equal lows. So it's almost like, we have essentially a move down, sort of sideways consolidation. And what's going to happen here? Are we going to have another move down, bringing it back to 20K? I'm not sure. One thing I do think, though, is that sentiment overall with crypto is starting to become more positive, I would say. And so should we have a pretty significant break below this, then I would expect the buyers to step in. And so, yeah, so pretty much we're just hanging on by this and then facing the sloping downwards moving averages. But one thing I do want to highlight is that the 50-week is actually right here. So we're using the 50-week moving average as support, which, by the way, acted as support all across the bull runs. So that's why, I'm not saying the bull market is over. I'm just saying it has a lot of hurdles to get over, basically. But it's still intact. Let's go ahead and take a look at ETH/USD. And so pretty similar story here, except we haven't even retested the 50-week moving average yet. And so all in all, this shows that Ethereum is a little bit more bullish than Bitcoin. And one thing we'll see here, which I thought was pretty cool, if we take a look at the ratio between Ethereum and Bitcoin, we have this sort of bottoming pattern. And not only do we have this bottoming pattern, we also have this area of resistance. And so once we sort of broke out as consolidation, this is when the significant outer performance between Ethereum and Bitcoin actually started, right? And so now it looks like we're sort of consolidating here. And so, yeah, so this is actually when I started to buy Ethereum. And the question is, when do we start buying crypto, right? Is this something that we can feel confident about in terms of actually picking a point where we can say, okay, now I want to put my money into crypto? Is there such a thing? Now, obviously, like, I can't time the bottom. No one can actually time the exact bottom. But how I'm playing this is we saw that the Nasdaq was at all-time highs, right? And I do think the Nasdaq will continue to move to all-time highs. If and when it does continue to break out, depending on where the crypto market is, I'm probably going to start to funnel some money into crypto. And I will speed up that process if we see that extra leg lower, right? Because technically, this sideways consolidation could almost be seen as a bear flag, right? Big down move, sideways consolidation, and the verdict is still out of whether we'll see this another leg higher. And so that's how I'm playing it. Like I said, if we do have another leg higher, that will speed up the process of me transferring money over into crypto. Maybe we retest this all-time high level. I'm not sure, or get somewhere close to about 20K. I think that's probably the worst case scenario. I mean, obviously the worst case scenario of anything is going straight to zero, but I don't think that's going to happen. I think Bitcoin has pretty significant support around the 20K area if we do get there. But regardless, at the moment, I'm still buying here and there. And heck, if Bitcoin and Ethereum get back to all-time highs, that should be awesome for my account. But like I said, I'm still holding some reserves. So let's go ahead and finish up this video talking about gold, because that's also been on everybody's minds. And so, well, actually, this has not been on everybody's minds. unless that mind is my mind and other 70-year-olds out there. And so let's go ahead and talk about where the gold market is at. So in my opinion, just to kind of recap, you guys know I'm somewhat of a gold bug or a gold bull, whatever you want to call me. I think that there was a bear market in gold that started between 2011 and finished around 2019. I do think that was an 8-year period of a bear market in gold. Technically, we could say this bull market started again in 2016 or 2019, depending on where you want to, did it start at the breakout or did it start at the actual bottom? Regardless, we can say that there was a bullish formation pattern starting from 2016 to 2019. And so once we actually broke out of this range, we went ahead and made a straight higher high. This, in my opinion, this higher high says a lot. This says that this uptrend is still intact, that we made a high here, a low here, now a higher high. Question is, where is that lower low? Is it going to be here? Is it going to be here? We are now sort of retesting this bull flag that the gold market's been putting in. But it doesn't look exactly inspiring the way that we're retesting it right now. So we'll see if we have to make a higher low. For the most part, I'm still bullish on gold. I think once the moving averages start to catch up, especially more particularly the 200 week, I think that'll act as super strong support if we do get there. But we have the 100 week just right below us. And obviously the 100 week acted as support during this bull run. And so yeah, obviously it is going to be sort of volatile once we start this new bull run. But once I think that the gold market really does take off, it should be a lot smoother. And so that's basically where my head is at. Oh yeah, last thing I'll say about gold is that I don't buy gold. I don't buy physical gold. I don't buy gold ETFs. But I do buy gold mining stocks. So if you take a look at the two gold mining indices, which are GDX and GDXJ, which is gold miners and junior gold miners, you'll find a lot of stocks there. I do a lot of research on the gold mining stocks, and so I picked a portfolio of some that I like. And that's how I take advantage of the gold bull market. So anyway, that's going to wrap it up. I hope you guys enjoyed this video, and I'll catch you guys in the next one.